Hi, this is Randy Finney with Right Side of the Chart, and this is a mid-session update for Wednesday, December 9th, 2020. I will do a very quick update here on the broad markets. I already sent out a post earlier in anticipation of the breakdown, which we now have. Well, let me talk on that a little bit. So just to kind of recap, this is a 60-minute chart of QQQ. We haven't had anything remotely close to sell signals on the broad market until recently, until today, really. Qs broke down as I mentioned the other day, but SPY, the S&P 500, the broad market didn't. It was at support at the same time and held support. And so what happened there is number one, we didn't see any impulsive selling. That's one thing you want to see on a breakdown. Uh, this is what impulsive selling looks like. This is impulsive selling after a breakdown like that. That last big sell signal we had back here in what was that, September, that was certainly an impulsive breakdown there. That's what you want to see. The more impulsive, the better. And I stated that at the time, and that led to the biggest drop that we've had pretty much all year, other than the drop into the March lows. Now, where does this one go? Well, I gave you some levels. I updated this chart. Obviously, that'd be your minimum target there. These are unadjusted. They're actual support levels. So I do want to say that, okay, so we broke down. We did not have that confirming sell signal on the S&P 500 until today, and that's why I'm doing the video. Shortly after I sent out that last post, we got it. So what happened is QQQ back tested and is now starting to move impulsively lower, and that's not random coincidence. This big impulsive candle has to do with SPY breaking down. Okay, so let's look at that. So that's the 60-minute chart of QQQ. Here's SPY. There's the comparable pattern. It's simple watch, rinse, repeat stuff. Look for these divergent lows like this right here. Those lead to rallies. Divergent lows lead to rallies. Divergent highs lead to corrections, and that's what we have now, a divergent high with finally for the first time in a while a sell signal. And sell signal I've been waiting on was a break of this minor trend line, which forms this rising wedge pattern, bearish rising wedge. There's your negative divergence there on the indicators. And here we go. We have a 60-minute candle that just finalized. That's why I waited till now to do the video. That's our confirming sell signal. A, it's impulsive. And B, we have a solid 60-minute close below the trend line. Does that guarantee we go down? No, there are no guarantees in trading. Puts the odds pretty high. And so again, I got that out to you guys. Hopefully, if you like short selling, or if you've been long and you're riding the trend up and you wanted to know when is it time to book profits, again, that would be best. Like I said, it's the only sell signal I've seen in a while. So here we are. You can look at minor support levels like right about here, pretty much where we hit the low today. Why is that minor support? Reactions here, here, here. Actually quite a few reaction highs, broke at reaction lows. So now your next signal comes on a break below today's lows pretty much, which is the last candle here that finalized at 1 p.m. Eastern time, and that low is 367.75. That should open the door to excuse me. Sorry about that, guys. Should open the door to move down here to about 364.18. This is a target zone. You have an uptrend line, more significant uptrend line, and I'd put that as what I call high probability minimum target. That's where I think we're going down to at least. And so, if you're a SPY trader or whatever you're trading, you're talking about another 1.5% downside. Is that a lot? No, but again, that's a minimum target. Now, the way it works, if we go on, hit that level, remember these are pretty big divergences. We have a lot of excesses. There's certainly the potential for more, and you can see some additional targets if and when that level goes. All right, so that's SPY, ES, NQ traders. I've been sharing this chart on NQ. We had alternate trend lines. This is a trend line I was watching for quite a while. We had a few breaks below it, just little whipsaws, closed back above it. So that trend line was never violated with a 60-minute close until now. And you can see once it was, that's the alternative trend line. Both of them were taken out impulsively. And there's my minimum target on NQ, the NASDAQ 100 futures, about 12,405. Next target's about 12,307. And if we go beyond that, somewhere down here, probably I might lower that line right now. Let me do that. Let me lower that line down here. I think that's a better fit, around 1275 right there, or 1280 we'll call it. Yeah. Okay, for you ES traders, these are the S&P 500 futures. There's a little minor trend line starting to crack. There's our negative divergence right there, divergence lines that indicate more than just a 1.5% drop is likely in my opinion. So here's a potential target. This trend line I think will come in. So that's my, let's just say there's some minor levels along the way that may produce reactions, may not. But that's I think right now a minimum target there on ES. Comes in around, remember trend lines are dynamic, they change every day, every minute. Uptrend lines come at higher and higher prices, so if and when we get there, probably about 3,600 give or take. Again, minimum target for ES. RTY, these are your small cap futures. There's your negative divergence right there. So they're all we're I believe we're going to go down all these major indexes, large and small caps alike. Little minor trend line there, minimum target. If you can make that out, that's about 1861.50, then 1811, and then about 1752. We'll call that 1753, give or take. So those are some near-term targets for you. RTY small cap futures traders, and if you don't trade futures, you like the ETFs better. Here's IWM 60-minute chart. Let's see if my annotations load. What's happened? We've been tracking these divergences. Talk about this all the time. Divergences are not a sell signal. You wait for a break of a trend line. So there's that minor comparable trend line. I'm pretty sure it's going to go unless this breakdown in the large cap fails. And so you probably have more meat on the bone on a short on the small caps. They've really gotten ahead of themselves. And I look at some of the daily charts, and they're scary. So I may start going through and putting up some individual stock trades, short setups. Like I said, I've been struggling for objective longs. The trend has been strong. A lot of things going up without any clear breakout levels or anything like that. Okay, so that's it. Let's see where this goes. If and then I'll always keep an eye on the daily charts and turn my focus out there if things start to happen. There's still an uptrend line. Here's the thing. Okay, I just showed you breakdowns on the 60-minute charts. Remember, this trend's been resilient. There's a lot of people in the market now buying just about anything with a ticker. And so you could see whipsaws on those 60-minute charts. You just have to respect it. If they get a whipsaw signal, so be it. It's the first decent sell signal I've seen in a while, but it's a sell signal on the intraday charts, 60-minute charts. Here's a more significant daily chart. There's the uptrend line I'm watching on SPY, and that's not yet violated. So where I'm going, if you want, if you're looking to position for a longer term swing trade, there's a level right there. I'll add a line, give you that. Let's say you want to swing SPY down here at about this 354.60 target. You want to see a solid break or a daily close, particularly a daily close. But if you're solid break, you look like you're going to get that. In other words, if it's 3 p.m. and we're well below that trend line, then that you're likely going to close below it. There are no guarantees. I just want to say that the daily charts are more significant, and we don't have a breakdown there yet. So I'll be watching for that. And then should we get that from where we're at right now, if 354, move that trend line there. That's just our divergence line. Should that 354.60 target get hit, that's about a 3.8% drop. Again, still nothing huge, but like I've been talking about for quite a while now, there are divergences all the way out from the 60-minute daily all the way out to the weekly time frame. So the potential is there that one little seemingly innocuous correction that looks small, 2-3% pullback could trigger a chain of events. I use the term the charts are stacked. When the charts are stacked, you have bullish setups and developments on the if it's a bullish setup on the short-term time frames that then can trigger some breakouts and bullish developments on the more significant daily time frame, which in turn then could lead to some bullish breakouts and developments on the daily time frames, and vice versa for bearish setups. So right now the charts are stacked bearishly with negative divergences all the way out to at least the weekly time frames there. So again, the potential is there. Right now, trend has been strong. Market breadth is good. Sentiment is very frothy, in my opinion. So, and those are the things that can also lead to very swift drops. We may not get it. They may buy up this dip into the close today, or they may buy it up tomorrow. But likewise, I can easily see the possibility of a very swift fall. When the markets get this hot and frothy with sentiment, in a one-sided trade, shorts have given up, they're blown out. That's what leads to those big drops that catch a lot of people off guard. And so, how you trade it's up to you. You can hit the quick little pullback targets. You can set a stop. If you get a good entry, set a stop and let it run if you think there's going to be more. Right now, I can't make the case for anything much more than a solid, a short-term pullback because we don't have any damage yet on the daily or weekly charts. Again, that can change, and if it does, I'll let you guys know. And the only other thing I wanted to do a quick update on is gold. Some might be confused today. Well, why is gold down if the stock market's down? Gold should be rallying. It's a flight to safety asset. It's all about the charts. Yesterday's post, I'll give you the static charts. I said gold was at resistance and a reaction was likely, and this is by far the biggest drop. It's nothing huge, but 1.64, it's a decent down day for gold. Biggest drop since right here. That's where I issued the first buy signal in gold in a while, start scaling in at the top of that buy zone. And so since then we only had one other red day and it was almost flat right there. And so yesterday was a good time if you're an active trader to book profits on your longs and or reverse to a short. Because as I said, the odds for reaction were elevated at that time. We were at downtrend line resistance. Now keep in mind too, it's not just gold hitting the downtrend line. It's also fallen back below that 173.80 level. That was support for a while. You can see that line here. Here's your support, support, support. Boom, big red candle that shows you it wasn't just a random arbitrary level. When that level gave way, it gave way with conviction, followed by impulsive selling. So that makes that level technically significant. Bulls reclaimed it briefly, but again, spent a lot of time doing a video and a static post on this recently. For those reasons, we're pulling back. And then more, or as importantly, I should say, is the Euro-US dollar. And if we look at this daily chart, it's concerning, and that's why I haven't I've been clear to say lately it's not an all-out, all-in buy signal on gold. I think the gold is pounding out or at or near a bottom, the end of a correction within a bull market. Now we've been correcting for many months now. We can continue to correct for a little while. We may keep going up from here, or we could have another pullback. And this is the Euro-US dollar pair, which I put a big emphasis on big weighting on my analysis for gold, because this tends to move with gold. When the euro is rallying, when this is going up, the dollar is falling against the euro, and that's bullish for gold. So when this chart goes up, that's typically bullish for gold. When this chart goes down, that's typically bearish for gold. And so, as I pointed out, we have divergences on the 60-minute and all the way out here on the daily, even the weekly chart. So it is possible we could have a significant correction here in the euro. That means the dollar rallies. That means gold could have quite a bit more downside. Hard to say. My convictions aren't super strong, because if gold is in a bull market, it can and often will shrug off or ignore what the dollar is doing and rally on its own merits, on its own supply and demand. In other words, if we do get a decent correction in the market, pretty big, more than 2-3%, gold may catch that flight to safety bid regardless of what the dollar is doing. All I'm trying to say is it's a little murky. I would be a lot more bullish on gold if I could make a bullish case right now for the Euro-US dollar. Unfortunately, I can make a decent case for a sizable correction. I'm not trying to give you targets. I'm just showing you that these divergences could play out for quite a bit. And even on the 60-minute chart, we broke down here. That was on the 4th or 5th right there. Breakdown, back test, a lot like what NQ just did. And we've been stair-stepping lower. This is a near-term downtrend, a series of lower lows and lower highs so far since the breakdown. And again, it was preceded by negative divergence. So all this said, hey, gold, a couple weeks ago, really liked it. That was time to start buying. And now, and talk about scaling in, you do it strategically. So you wait. If this continues to play out, euro down, gold goes down, you continue to scale in as a long-term investor. If you're an active trader, well, yesterday was, about as good a time as any. Silver is, typically rallies more than gold. So the gains on silver have been nearly twice this. But that rally in gold from where that buy signal was given just a couple weeks ago. That was a quick 6%. Again, not much on gold, but if you're trading the miners, they're leveraged, more like a leverage play on gold, 11%. If you trade silver, silver was up over the same time period about 12%. So again, in other words, I wouldn't on this pullback here. You could continue to scale in, but I think you might get a little bit more if you're a long-term investor. Might get a little more downside in gold in the near term. And then last but not least, and we'll wrap it up here for you futures traders. There was, the day that that buy signal was given on gold, we had nice divergent low on GC. These are gold futures. And so that was the technical catalyst. It wasn't just random for the, time to start scaling back into gold there. And we've come full circle. It's been a nice rally. The futures themselves, if you trade gold futures, that's been about a 6.5% run. Now, per GC contract, I don't have to tell you if you trade gold futures, that's putting, many thousands of dollars in your pocket if you caught that run per single contract. But what happened since then is we ran up. This was a very significant level, about 1855.50 right there on gold. I pointed out before it broke that right there. There was your breakdown, impulsive selling since, and gold regained it. A lot like I was showing you on the daily chart, regained that resistance level, but now has fallen back below it. So the fact we're back below it after briefly recovering with what I call momentum fueled overshoot, that's not so good near term. Now, if we can regain it, great. If we can do this and get back above this previous reaction high here, great, and that's fine. Otherwise, we could see in the near term additional pressure because we did put in this divergent high recently, and those divergences are just starting to play out. So again, yesterday, with the odds for reaction being elevated, that was a good time to book some profits and/or reverse into a short. And I'll let you know. Right now I can't make an objective case to step back in and buy. It's not to say gold can't reverse here. It just means I don't see solid support or anything else. In fact, we're just starting to play out some of these near-term bearish developments. So there's the outlook on gold. Probably see a little more downside in the coming days to maybe weeks here, and I'll continue to post updates on that. All right, let's wrap it up here. Get the video out to you guys. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.